Nobody really likes these charts, that go up, go down, and then you think, this is the bottom. And then you see something like this, and you're like, what? It goes down even more? Well, in today's KuCoin DigiDive, guys, we're going to go ahead and talk about a couple of signals you guys need to look for. But in general, there is one. There are some other signs that you guys need to look for signals to this, and I'll explain those later in this video. But welcome to the KuCoin YouTube channel. In today's KuCoin DigiDive, we're going to be going over when is the bottom. If you guys would like to go ahead and get started trading, you can get 20% off trading fees in the link in the description below. So no surprise here. As you guys can see, the price of Bitcoin is doing what it does. It's sitting on a strong support around 20K, which was the last previous all-time high from 2017. After this, the next somewhat support is going to be around 17, and the next strong support is going to be around 10K. But with this price, we need to look at a couple of factors to tell whether this is the bottom, if it's time to buy now, or should we still be stocking up some bullets. When I say bullets, I'm referring to cash. So the most important metric to look at has to do with annual inflation rates. A lot of people think it may have to do with interest rates, but all in all, it has to do with inflation rates. There's a reason the government has to rise interest rates. This is to lower inflation. So the main cause of this has to do with the inflation rates. When these go up, the government has to have different tools and different steps involved in order to lower that. And they usually do that by rising interest rates. And when this occurs, this immediately elevates short-term borrowing costs for several financial institutions. This has a ripple effect across all companies as well as consumers in the economy because it costs the financial institutions more to borrow money. So it's not as cheap. And when this happens, the financial institutions, these could be banks, these could be companies that are owning different houses, etc. They charge their customers more to borrow money. So you have this trickle-down effect that affects everyone, literally any and everyone. And you have things that come out like this. As you can see here, this is Suzu over Three Arrows Capital. He made this tweet recently saying, "We are in the process of communicating with relevant parties and fully committed to working this out." AKA fun talk for, hey, look, we're in a tight situation and we're going to work this out with all of our LPs. Or you have things like this over at Celsius Network saying, look, we got to pause withdrawals, swaps, and transfers between accounts because we're in a tight situation and we don't have the money to pay out. You have different institutions, especially in the crypto world, that are feeling this pressure. Let me show you this video on what the interest rates have and the ramifications on the market.
Investors should observe the Federal Reserve's funds rate, which is the cost banks pay to borrow from the Federal Reserve banks. By increasing the federal funds rate, the Fed makes money more difficult to obtain, effectively lowering the money supply. This helps control inflation, which occurs when too much money chases too few goods, causing price increases. A ripple effect ensues when banks don't borrow as much from the Fed. It starts with banks increasing loan, credit card, and mortgage rates. Consumers have less money to spend, so businesses see smaller revenues. Borrowing also becomes more expensive for businesses. They don't borrow as much and must pay extra interest on their loans. They spend less, causing profits and growth rates to fall. If a company cuts back on growth spending and makes smaller profits, its estimated future cash flow will drop. This also lowers stock prices, which could potentially cause the market to fall. Most investors don't want a declining market. When expectations for growth and future cash flow decrease, stock prices don't appreciate as much, and owning stock becomes more risky. Investors expect risky investments to return a risk premium, which is the return above the risk-free rate an investment should yield. But remember, a higher federal funds rate also increases interest rates for safe investments like treasury bonds, making them more desirable.
Now that you understand what interest rates do on the market, this is typically one of the first tools that the Fed uses in order to lower inflation. So the number one sign that we're going to be looking for hints or signals of a bottom is the inflation rate to stop going up. It doesn't have to come all the way down, but on this chart here, as you can see, we've been around 1.7, 1.5, 0.8, on average between 1 to 4% or 1 to 3%. But you guys are seeing here, it is screaming around 7 to 9%. And this isn't even the actual inflation, in my opinion. This has actually been played around with by taking out different weightings of like cars, oil, houses, etc. And the government does this and sometimes make it seem not as bad as it really is. But time will tell, of course, and we'll see what happens. So a couple of other hints and signals towards this will have to do with Bitcoin dominance and speculation in the market. Obviously, first is different funds like Celsius, Three Arrows Capital, these not going bust. These are different dominoes. And if these guys go bust, eventually the different LPs that depend on them paying, they go bust. And the LPs that then go bust because Three Arrows Capital or Celsius isn't paying them, then the LPs that are providing for that company go bust. If you didn't see that latest dominoes video, make sure you check out the domino video on KuCoin so you guys can get a full understanding towards it. But the first hint towards this is different funds and VCs not going bust and out of business. This is also called a deleveraging event. The second is speculation in the market. There are a lot of people still speculating, and one of them has to do with USDD and Tron. This is an algo stablecoin, which is paying about 22 to 30% per year for depositing into these pools. This is a concern for several reasons, but the first has to do is where is the yield coming from? Is the yield coming from new currency that is printed? Well, if that's the case, then this is just another Ponzi. When this other Ponzi happens, this is just another ticking time bomb for another collapse. Not financial advice, of course. The next has to do with Bitcoin dominance. As Bitcoin dominance is weak, which typically happens during a quote-unquote bull market or when people are speculating, this means that people are still somewhat risk on or at least speculating in altcoins. Until this reverts back to the mean, I'm not saying it has to go to 95%, but a mean around 60 to 70%, then we still have some time to come down. There's still hopium in the markets as well, and with hopium, people are still speculating. The classic saying of the market will go up when nobody expects it to pertains to this. If there's still people thinking the market's going to go up, then it's not so much. We're looking for the point where the sellers are forced sellers. The forced sellers are going to be the best. It's because they don't have a choice to sell. They're being forced into the position to sell, and they're willing to sell it cheap. It's almost like someone going into bankruptcy with a mortgage and they just need to get out of the house. What happens is they sell everything dirt cheap so they don't have to pay extra for moving costs. So just some other food for thought. So overall, what are my closing thoughts on this? Well, first, we need to see the inflation rates come down. When inflation rates come down, interest rates can then stop going up or at least start to come down. Of course, I'm not the Fed, so I don't decide that, but those are just different signs you need to look for. Also, when the interest rates come down, the cost of borrowing capital goes down as well. So these companies that are operating on razor thin margins are able to still be companies. And as for buying Bitcoin or any other tokens itself, it really depends on your time horizon. If you're here just trying to make a quick flip in about 6 months, it's obviously going to be much harder to make a decision than if you have an outlook of 5 to 10 years. Typically, if you have a longer term outlook, just making in dollar cost average buys at scheduled times will allow you to get the average price. Instead of just buying the bare bottom or the Pico top, you actually just get an average between it and you get different buys here and there. So that is a really good strategy if you're long term, and it's also very good to always save some bullets. If you're saving bullets, this will allow you to capitalize on different opportunities when they arise. Let's go ahead and hit you guys with a wisdom one-liner. From Proverbs chapter 14, verses 34. Righteousness exalts a nation, but sin condemns any people. Be good, be righteous, be nice. Thanks for watching this KuCoin DigiDive. If you guys enjoyed this video, make sure you guys smash out that like, subscribe to the channel, hit that bell notification. That way you guys are notified every time we make a new one. And if you guys would like to see some of our previous videos, there's one here, 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 and like there. We'll see you guys in the next one.